Good afternoon. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the S&P 500, being recorded on Friday, September the 12th at 2:35 p.m. Pacific Daylight Time. As I always begin, I'm here on the SPX, the cash market, and I'm on the maximum monthly chart, so I have the most data showing that's available to me. And this one goes back to 1927. And so it's been underway for quite some time, or it's building. And so, what the largest degree that I have is the one that uh, Elliott provides, and that's Grand Supercycle. That's in the blue. Supercycle is in the lighter blue. Cycle is in the brick red. Primary is green. Intermediate is yellow. My minor is the tan color up here, and then it starts to get a little bit hidden. So I'm going to start with that we are in and getting at what I believe to be the finishing stages of the cycle third wave that began in 1949. So it's been underway for quite some time. And uh, what's going to consist inside of that cycle three are five waves of primary degree, of which one, two, three, and four are complete. So we're in primary wave five of cycle wave three. In primary wave five, there are going to be five waves of intermediate degree, labeled one, two, and in the yellow. And so far, one, two, three, and four are complete. So I'm going to drop down very quickly to my 5-year weekly chart. And there we have intermediate wave three, intermediate wave four. And you know what? I noticed that these are actually in the wrong colors. They should be in the bright yellow, not in the tan. So give me 1 second to fix that. Okay. So we're in intermediate wave five of primary wave five of cycle wave three. So we're finishing this up. Now, within this intermediate fifth wave, there are going to be five waves of minor degree, of which we have one, two, three, and four is complete. And that minor wave four completed in April the 7th of 2025. So from that point, from that low, we have been moving higher within or under the context of a minor fifth wave. And that minor fifth wave will consist of five waves of minute degree, of which we have minute one, two, three, and four complete. So that puts us in minute wave five, of minor wave five, of intermediate wave five, of primary wave five of cycle three. So we've been building up to this high, and within minor five, we're going pretty steep. Now, at least you can see on the weekly chart. So now I'm going to bring this down to the daily chart. And so now we're going to go inside minor wave five. So that's what it is. The final countdown, so to speak, as we move up in this minor fifth wave to complete the sequence all the way up to cycle degree. So minute one, two, three, and four are complete. And minute wave four was a rare Elliott pattern as a running fourth wave. And I've been going over this and I've gone in detail and I've taken a couple challenges on it and I've gone back and really kind of scoured or let AI scour to find what R.N. Elliott actually said about the running fourth wave and what's acceptable and what is not acceptable. So I think we've met the challenge. And so I'm leaving this as a running fourth wave. And it yielded to a minute fifth wave, which, as one would think, it it shot up or it accelerated or it exceeded and went up, thrusted up and out of the triangle. That was the word I was looking for, thrust. So it thrusted up and out of the triangle. And then so within minute wave five, and now I can bring it down actually to the hourly chart. Now we're inside. There's the triangle. Now we're inside minute wave five. And this is going to take us right to today, right? So here we have minute wave five. It's going to be five waves of minuet degree, of which one and two are complete. But this thing has been subdividing, making it a little bit more difficult and keeping you on your toes in terms of like, okay, how deep we're going to go and just trying to make it all fit. And I'll tell you what can make it more difficult is when they do subdivide several times. Now, my history is that I'll go and I'll start subdividing, but it's only so far that you can go. You can't just keep running it lower and on a lower degree, before it needs to be changed. So again, right now I've got 1, 2, 1, 2, 1, 2, and this is all within this minute wave 5. So the minuet wave 3 is subdividing, the subminuet wave 3 is subdividing, and the sub degree, that's the one we're finishing. So we have 1, 2, and 3 inside this subminuet wave 3. So I believe the 4 may or be done, or we get a little bit more. And for that, I can just run um, retracements here. And I will get that set up for us very quickly. And like so, and like so, and just putting those two in because that's about it. Not to go too deep. So here we are. First of all, I should have left those out. So let me go down to the 15-minute chart real quickly. We can get to the inside of this thing. So here we have 1, 2, and then I can go 1, 2, 3, 4, and then 1, 2, 3, 4, 5 up. Or this might, see, it came down a little bit too deep, but it stopped there. So if I'm counting this as 3, we may have already done the 4, or that's A of 4, B of 4, and we get a C of 4. Now, this number here was to show that wave 3 had gone above the 100% marker, which was at 6590.93 or 6591. In fact, today's high was in the SPX 6600. So it did it. It got there. And that was the kick. And it went up and it took a look because that's a call wall as well, was at 6,600. And interesting that it went up and it tapped it on a Friday expiration. And so I don't know what's going to remain there, if it's going to remain the call wall. Because obviously it was not taken out. It just was tested, but it got turned away pretty quickly. So we got to still leave open the possibility that we will turn again, go up, and that's why I have the next level up on this smaller degree, but that's all the way up at 6636. Now I have here 6597, but that's going to be for this degree of third wave. So we need to finish. Once this is done, then yes, it'll finish that. So if indeed this is 3 and a very shallow 4, right? So we've already gone below 0.236, right? With today's low at 65.79. So from there, if that's going to complete this small 4, then we can go back up. We need to just get above 6,600. So maybe to start our week on Monday, the market ends up actually going and breaking the call wall and producing an additional strong push to put the finishing touches on the fifth wave up and this third wave. So we have 65.97, but we know it's got to go above. We have the call wall likely is going to remain at 60. Right by Monday, it's probably going to be 66.05, which was in the future, that was the high. So, but we need it here in the SPX. So, but we also have some resistance at 66.16. For this particular wave, we're over 100. So if I get that 4 in and then put the 5, I can put a marker there, and you would go from here to here and then put it up to there, and then you're going to get the fifth wave. If indeed we're going to mark this as 4, don't know yet. So, but those are where we're at in terms of finishing up all of these runs. Go back out to that hourly. So right now we've got the minuet third that needs to be completed, the subminuet 3, which needs to be completed, and that one being close. So, because these are the sub, and that's to complete this 3. So we just need one more, maybe a little bit more to the downside, come up, go above that level. We will, once I know 4 is in, I'll run this fib there up to there. So again, you're taking wave 1 and you're now going to connect it to the bottom of the wave 4. once we know it's in, and then you're going to get your fib levels for that fifth wave. And I would suspect that it could get itself up where I'm showing, like mid 66 up to 66, 22, 32, up into that area. That could do it. And that's only completing this third. Then we get another four, and then we get another five up, and then we complete the minuet third, and we get another four and another five up, and that completes the minute fifth, the minor fifth, all the way up. That will be our final launch. Now, again, just talking in terms of the time factor, um, market continues to basically adhere to the surge part of what we were looking for, but most of the algorithms were basically geared toward showing that happening in the fourth quarter, and within that, showing that there could be a surge in the month of December. And that could take us into the new year of 2026. But I'm kind of trying to count this as carefully and as completely as I can. And so far, it's like I'm trying to get every little move. And if we're going to count that this is going to finish, and when it finishes at cycle third, that we should have a primary wave A starting of that cycle fourth wave. So that should be a pretty steep decline to kick it off. And if so, timing, of course, and the algorithms, and also year end, and how things have been trading, I would think that there could be a run towards that time, and major changes happening in terms of uh, portfolio management and all kinds of things. It's like if yeah, we'll see how the market adapts and then starts to change. So it could come all the way to the end of the year, or it could come before. So we could start, this could be done into October. And then if it is, that's the fourth quarter. And we'll see. We'll wait. So the timing again is going to be interesting. And because as we get up, that's why we have more time, because we got to finish this third here and do a 4-5 this third and 4-5 for this fifth. So there's still a lot to go in terms of running it. And so I still believe that we have a fair chance of crossing 7,000 before all is said and done. So those targets remain in place, and we have another one all the way out here at almost 7,400. So, and it could surge. So in other words, we're just like, we're just going. And people may be like, why? And I think a lot of it will be around options trading. A lot of it will be controlled by gamma levels, call walls, put walls, volatility triggers. That style of trading, in terms of when the volatility triggers is triggered to the upside, it's a buy. That's the what will happen. The nature of that trade, that volatility trade, is that the marketplace or dealers or traders are selling the VIX, selling volatility, and then taking that cash, since it's a cash market, and buying the underlying volatility within that index. So the 500 stocks that are within it, that you would see when you see the risk on trade, they're buying the volatility of some of those underlying stocks in the SPX. So with all of that in mind, I think that stays in play until it's done. Even though, we do see some spikes, we do see some movement in the VIX, in terms of, that it does rally back to 18, 19, and then it, drops off again. So in any case, here in the SPX, I think that we're close. I think we still have more to do. Moving averages are all looking fine. I would go out to the daily and I would take a look there, and you can see boom, 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 boom. That's a 200, that's a 50, that's the 20, and there's the 8, all very comfortably heading higher. So things are still in alignment to move higher and finish. So again, And then once that's done, this is the thing that a lot of people don't want to wrap it themselves around. That you mean that the market, the S&P can come back. That low for that fourth wave, by the way, which was just 2009, right? March of 2009, 667 here in the cash. Can it do it again? Well, accordingly to Elliott, yes, but I think that many other things will be coming in. Again, I do believe as long as the amount of capital that's in the market continues to turn in the market, so there's plenty of money changing hands and trading, then I think that we will correct, but there'll be enough to do to continue, and the market can reach those levels. It's kind of when things kind of dry up and we don't have the volume, and a lot of the money has exited the equity markets and exited the different markets. That's when it can get, then you get stagflation, then you get kind of nothing. But I think because it's just a correction and it's really coming from a high level, that yes, we could come down very quickly. And so I'll be looking pretty close to see how this all goes. And again, what initially may start it could just be that the market reaches these new all-time highs and realizes that the S&P 500 as for just the stocks can't support the level. I was like, because it's like they're not the whatever. There's going to be a ton of reasons. So I'm going to finish it up there, to be honest with you, because there's not much more to be adding to it. The week itself was not as easy to trade because, again, what we're seeing, or what I'm seeing, is a lot of rotation in and out of stocks, and which weren't in favor at the beginning of the week, but towards Friday, expiration, were actually, hey, this all looks good, and made very strong moves. For example, Tesla. Over the last couple of days, Tesla has just gone through the roof, and today was pushing. It was $6 short of 400, and it was only crossing 300 just a little bit ago. So lots of activity. Apple going down, turning, coming back up. Nvidia playing around, but still unable to really hold itself above 180. So again, just a lot of rotation, and I think we're going to continue to see that as we get ready for the monthly September expiration next Friday, and then we have uh, the end of the month, the end of the quarter expiration. I believe is going to be September the 29th, because the 30th, I believe, is on a weekend. So there's still quite a bit to to get through and trade. So I think that each one of those we're going to see could keep a more difficult market in terms of just the rotation of capital within the index. It seems that a lot of times it's a push-pull because like a stock like Tesla going up as it does, it has a stronger pull as it goes to the upside. But then to the other side of that, we've had other stocks that were actually moving the other direction. But then once Microsoft, once Tesla, Microsoft, Apple, all together, just actually basically those three started to really push and were up very strong. And that kind of kept the market up for the balance of the day, even though the ES closed down 4, the NASDAQ did not. So again, it was kind of most of the move today was courtesy of tech. All right, that is going to be it. And so the next update will be the Elliott Wave morning update on Monday.